Hi, Rhonda. So Rhonda
Hi.
is the owner of Equity First. She's one of our new best friends, and you are the expert on financing and credit. So take it away, Rhonda.
All right. So thank you so much for having me. So like Joe said, my name is Rhonda. I am the founder of Equity First. And since 1996, I have been working with small businesses and consumers in financial distress. So my whole purpose is twofold. It's taking the people that have had a financial challenge and making sure that we make them whole. And then the second would be the preventative, right? Looking ahead and forecasting what may go wrong down the line and offering consulting services to make sure that people are making educated and smart decisions. So very similarly to what you were just talking about, I'm listening to you speak about the financing and financing alternatives, and it makes a lot of sense. I think people just need to process that for themselves singularly, not as a whole. So where a lot of times I'll have recommendations for a client, it's not a one size fits all. So oftentimes we're spending time working through the challenges with each individual client. But for the sake of our conversation today, we want to speak about being financially healthy and knowing that without making the appropriate choices that you were speaking about, all those options and alternatives that Joe just mentioned means nothing because you're not putting yourself in a position to qualify. So when you are doing renovations and you are looking at getting that Home Depot card because you purchased real estate and you don't want to really take out a $25,000 loan, but you can get a $25,000 line of credit from Home Depot, you still have to be able to credit qualify. And that's really the basis of the heartbeat of everything that we go through in America and our American culture and society to make that decision. So a few things about credit on the personal side, and we'll speak about personal and on business. So on the personal side, you have two people: the people that are deathly afraid to take a look at their credit, and those that are proudly checking their app every day. Right. So it's one extreme or another. Rhonda, I have a 720. How do I get a 780? Or I'm afraid to check because of the fact that I know that there's been some hiccups. So we'll start with the people that are financially healthy, or we should say credit healthy. It's smart to check and subscribe to any service. Most of our credit cards offer it for free. We recommend our clients to go to Credit Karma and Experian. This way they can monitor it. And even if you know that you're not a credit abuser, what's nice about having these free access, resources is that they'll alert you if something is happening. So for example, if you have great credit and you're very credit focused and you recognize that your app sent you a message that there's been a change or there's been an inquiry, these are great tools for you as a consumer to make sure that you're then logging in to say, I don't remember authorizing Citibank to run my credit, or I don't remember authorizing this company. So it's just a good way for you to stay on top of activity. And what I always tell people, do not get focused on the score. The score and the data change all the time. So again, if you are somebody that has a high credit score, you have good credit, do not get focused on your credit score. It's really about the data. And most importantly, we try to make sure that all of our clients that have good, healthy credit have 3 to 5 active trade lines. And that's a combination of what we call revolving and installment. So if you have a mortgage, a car payment, a student loan, and 3 credit cards, and everything is being paid on time, you should look like a rock star. You will see a decrease in your credit score if you are a credit abuser. And that's just somebody who is frequently utilizing every single month their lines of credit. So if you have small lines of credit, such as $500 or $1,000, it's very easy for you to make one car repair and see that your credit will decrease 50 or 60 points because you maxed out that credit card. So just keep in mind that your credit and looking at the algorithms and the way that they work, again, for somebody with good credit, just pay attention to your spending. If you think that you are going to need more credit beforehand, go ahead and apply for another line of credit. It will keep what we call your credit utilization down. And again, just as like to give you like a quick analogy of what that means, if you have 5 credit cards and they're each $1,000 each, but you know that you want to have an in-ground pool put in, and even though you got financing for the pool, you want to buy all your outdoor furniture and you want to buy, a bunch of things, and you're going to spend $3,000. Well, you've now, in theory, you are over 50% utilization on those credit cards. You may want to consider opening another line of credit just so that your overall utilization is kept lower. And that's if you are somebody that is completely credit focused on score only. Again, when clients come to us, we're not always looking at score. We're looking at the data and how we can manipulate the data to giving you a higher score, but keeping your credit healthy means keeping your balances low. And again, so therefore, if you have to spend somewhere, you may want to consider opening another line of credit just to keep your overall utilization low. In relation to clients that we see that have bad credit and they're afraid, right? So the good news is that you have people like myself that will give you a free consultation and an action plan and tell you what you need to do to overcome those challenges. So oftentimes what we see are clients with low scores. And people generally don't wake up in the morning and say, today, I don't want to be responsible for my debt. There's generally been a life event that was a trigger, a death, a divorce, taking care of an elderly parent, a sick child. Maybe they made a poor investment choice. Maybe they brought on a bad business partner, right? So all of these things are what we deem as life events. So somebody didn't wake up and say, I decided to bang out my credit cards, $25,000, $30,000, and wake up on a Tuesday morning and decide not to pay it. There's usually been a trigger. So in scenarios like that, we work hand in hand with the client, and it's important to assess what is happening. Is it a debt problem? Is it a credit problem? And where do you start? You start by looking at your budget. So if you know that you have an exorbitant amount of debt and it seems like it will be forever for you to pay that debt off, I hate to say it, but sometimes we'll just recommend to a client a bankruptcy because that's meant to have a fresh, clean start. And just to give you an example of what that looks like, if somebody came to me and they had $30,000 worth of credit card debt in default, but I sat with them and their budget only allowed for them to maybe pay about $100 to $150 a month towards that debt. Well, even if I got them 50% settlement offers, that's $15,000. It would take them years at $150 a month, putting that money away to pay off.
They'll never pay that off.
No, and you're at risk of being sued by any one of your creditors. So in a scenario like that, when we sit with the client, again, it goes back to the budget. So credit and budget go hand in hand, and it's specific because you want to make sure it makes sense. So if $30,000 was their debt and they could only apply $150, we would recommend bankruptcy. 90 days later, they are debt free, and we would help educate them towards saving the $150 a month that they would have used to pay off those creditors. And we teach them how to reinvest it back into themselves, right?
Okay,
So that they have an emergency fund.
Can I ask you, I know that you have to leave, so I want to let everybody.
No, go. I have until at least 2, that's
okay, but
fine.
I'm coming up with a lot of questions and
Go
I
ahead.
can't, so I want to cover them as you bring them up.
Sure.
And if anybody else has any questions, either
They could throw it in the chat. That's fine too.
throw it in the chat for now.
Mhm.
And Rhonda, did you put your contact info in the chat?
I did.
Okay, great. So let me go backwards. You talk about debt settlement.
Mhm.
Okay, so you offer that, and how does that
We
work?
offer that as a service to clients. It's part of our overall plan. As a company, we're structured as a consulting company, and anytime there's anything that revolves around debt or legal matters, we have 2 in-house attorneys that are staffed with us.
So now if I got 50% off on my credit card, would that affect my credit?
What would happen is, keep in mind, you would need to be in default before you can settle. So
Oh,
the
God.
damage to your credit is already been done. If you settle, it will be marked on the credit report, settled legally for less than full balance. However, because credit is something we specialize in, depending upon the creditor, there are often times that we can negotiate directly with the creditor for what we call settle for delete. And what that means is
Oh,
that
wow.
they will actually permanently delete the entire account off the credit report in exchange for us making that payment to the creditor. So
Wow.
anytime we could wipe away, right, or completely reverse any negative effects that will overall increase the credit score. But we also want to point out that any type of settlement over $600 in savings is subject to a 1099-C.
Oh,
So
I was
right
going to
back
bring
at
that
you.
up. That's one of Elizabeth's favorite
Uh-huh.
1099s because we're getting more and more people with those, and I don't know if
Yeah.
it's because the credit card companies are under pressure from the IRS. I have a feeling that that's what it's from. In fact, we had a couple of people that did something. Oh, they had mortgage
Mortgage
relief.
cancellation, those are usually for
Yeah,
second mortgages.
yeah,
So that was very popular in probably like 2010, 2011, after
yeah.
the market crashed. If you had a second mortgage and there was no equity in the property in second lien position because of the fact that the market collapsed, a lot of the lenders received money from the government, and the Department of Justice, actually would wiped out from the DOJ people's second mortgages. So what would happen is that they actually were zero balance, but they were 1099. So you still, as a consumer, had to claim that loss as income on their tax returns unless you were able to show insolvency, right? So that goes back
Right, right. So
onto
there
you.
are there are exceptions, and it gets
Correct.
pretty muddled, but it's not always, so you'll get the 1099 C, but you don't always have to. You have to report it, but you have to also tell them, oh, I qualify for one of these exceptions.
Also keep in mind that just because you have a zero balance letter does not mean that they filed the appropriate paperwork to actually satisfy the lien. So the
Oh, wow.
lien is done through the title company because it's specific to real property. So even though the mortgage company discharged your debt and obligation and sent you the 1099, it's so important to make sure that those customers or clients go back, they do a property search to make sure that the mortgage lender correctly satisfied the lien and that the lien release was issued in reference to that particular lien.
Interesting. Now, do you need a lawyer for that, or can you do
No,
that?
you could do it directly through a title company.
Okay.
It's public
Uh,
record.
Couple more questions. So you,
Mhm.
you talk about budgets. That's my thing because when businesses start, they never have a budget.
No,
People have household budgets when they come to you, or are you educating them on this?
it's a combination. A lot of times people don't recognize the bleed until you point it out. So for example, if I'm sitting with a client for the first time that is coming to us because of a budget problem, again, they could have perfect credit, but they're just making minimum payments every single month. And
Overextended.
right, and they're overextended, so they'll come to us and we speak about the budget. I require them to get a debit card and start really putting all of their spending on debit. That'll give me a bird's eye view of where they're spending their money. And most often it is on things that are what we call unnecessary. So the best example I can give you is people that drink coffee. They love to go to Starbucks. They may go
Uh,
twice a day. That could be $10 or $12 a day. So that could be $200+ a month. And I have to explain to them that the barista is only nice to them because she's paid to. There's no personal relationship, even though she knows your name is Jenny or your name is
but
Bob. They
now
feel this
you're
personal connection, but they're paid to be nice and provide service to you. They're not really there. Same with the deli in the morning. You want to stop into the deli or the bagel store. There are ways to cut back, and there are little tips and tricks that we offer to our clients when they are budgeting, I should say.
I got to start sending our budget clients to you because it's pain. When you ask somebody to change their habits, it's painful.
Mhm.
Two more questions and then I'll let you go on. I'm getting a lot of emails, or when I go on to my Credit Karma, they're telling me to add my bills, like my monthly utility and cable bills, and they're
Mhm.
claiming that it's going to increase my credit score. Is that true?
It can be for some people. Those are called alternative lines of credit. So we've all seen at this point commercials for Experian Boost. So that's
Right,
really
right. That's what it is.
So Experian Boost offers a program for people that have limited credit. So somebody that may have one secured credit card or maybe no credit, they've have always used debit cards. Maybe it's somebody who's younger or
Right.
just prefers to work in cash. Now all of a sudden they need to, you know, purchase a car or buy a home and their credit is limited. So what Experian Boost does is they allow you to connect your bank account, and what they'll do is they'll look for things that you pay on time every month, such as cable, maybe a gym membership, your rent, could be a cell phone bill, could be a doctor bill, could be anything, right? You pay the
Okay.
orthodontist every single month. So what they'll look for is consistency, and then they'll utilize that and add it as a line of credit. And if done appropriately, it can give you anywhere between 8 and 30 points.
Oh, wow.
So it is very important, especially if somebody's on the crux of qualifying for either a better rate or qualifying in general for a program. And then there are alternative methods for Experian, I'm sorry, for Equifax and for TransUnion. They don't offer a boost program like Experian does, but there are alternative companies such as, they have a company that will report your rent every month. And these are paid services. So
Okay.
Experian Boost is free. But if you want to report other things, there are companies out there that you will pay for the service, but they will report that for you. And the goal is that it's not permanent, it's temporary, just to help boost your credit score and give you a line of credit during that period of time. And an alternative, if somebody needed to really boost their credit because they had lack of credit or they were overextended on their credit, is to ask a friend or a family member to add you to a line of credit. So if I have a $5,000 line of credit with Discover Card that I don't use and it's been open for 5 years, if I added you, Joe, you would instantly gain my 5 years worth of good payment history.
Oh, wow.
And the fact that it has a zero balance would help offset the algorithm of the overall debt that potentially you're carrying. So there's
Cool.
a twofold in that. So friends and family, you can go and ask them to add you as an authorized user onto their credit card. They don't have to give you the card. You don't physically have to use it, but it's there for tricking the algorithms is the best way to say it, because you're secretly utilizing somebody else's good history to improve
Nice.
yours.
So listen, I could talk to you forever. You're a wealth of knowledge, and we share the same idea of educating our clients.
Mhm.
So does anybody else have any questions? I could just keep asking your questions all day, but I know that
You
you
could,
got.
I still have time. I think also I want to touch on the business credit. Um,
Yes.
what's
So
important. Mhm.
that was I have two other questions. If you want student loans, is there anything that people can do with them?
Sure.
And also, what's the process for getting separate business credit outside of your own personal credit?
Okay, so we'll touch on the student loan first. So I have a specialist that works at my company that handles all student loans. But as an overview, if you have been making payments on time, there are multiple changes to student loan debt relief. So the best thing to do is get out from behind it, directly contact your student loan administrator, whoever's handling that debt, and review your loan with them. You may be eligible for principal reduction, right? It's just included. It's part of the programs that have been implemented over the last several years. If you are somebody with student loan debt and you are in default, that will be held against you. You cannot put federal student loan debt into a bankruptcy. However, the student loan organization understands that sometimes people just can't pay. So again, getting out from underneath it, there is an income-based program for student loan debt. So if you owe $80,000 from a master's degree that you've never used, and you're angry, but you still owe the 80,000, and the reality is that master's degree, you're now a preschool teacher and you're just not making the money you thought you were going to make, you could do what's known as an income-based program with your student loan, and you have to renew it every year, but it will keep you from being marked in default, and it will take you out of default. So it's kind of a win-win. So even if your net after all your expenses shows that you can only afford $50 a month, the student loan organization will give you a payment for $50 a month, right? So it's income-based, and it's allowing you to not have your debt in default. So that's in reference to student loans. Susan just sent a message. How do you get debts that have been written off, removed from your credit report? So I'm going to do the best I can to address that, Susan. So number one, if you have debts that have been written off, it's important to know when they were written off, because there is a statute of limitation for how long they could actually stay on your credit report. And from a federal, that is 6 years. New York State just recently passed some new legislation. And for example, now if you have debt that's more than 3 years old and they have not collected, it's not that it's uncollectible, but it's uncollectible, right? There's a new statute of limitation that's saying that if you haven't collected your debt within 3 years, it's no longer collectible. If you've paid off the debt, it was written off, depending upon the creditor, you may or may not get it written off. So if you have a write-off, for example, it was a charge-off from Bank of America, the chances of Bank of America taking that and permanently removing it is going to be limited, because there's already an acknowledgement there was been a default. So it would be different if there was no acknowledgement, because then you could actually prove and fight different methods legally in reference to that debt. So if it was paid off and you just want to get it off your report to put it behind you, if it's any major creditor, chances are until after the statute of limitation of 6 years has expired, you will not get it off. However, it's important to also know anything that's been written off, even if it was paid, really only affects you for about 24 months. Credit is based on an algorithm of the expectation of you making payments going forward, just utilizing a little bit of your history. So if you have charge-offs, collections, late payments, and they're more than 2 years old, chances are they're not impacting your credit as much as you think they are. And if they are written off and you did not pay them, again, monitor that statute of limitation. Don't make a lump sum payment to a creditor if the statute of limitation is around the corner. But if you are given the opportunity to settle that debt, again, depending upon the creditor, you could ask them, if I pay you, will you delete? And that's your magic word. Will you delete that data from my credit report? So you could ask them that during negotiations.
Awesome.
Okay. And then your other question.
Business credit.
Business credit. So it's important. Obviously, a majority of the people I would assume that are on this call are business owners. And it's very common and customary for business owners, especially solopreneurs and smaller companies, to rely on their own personal credit to make business decisions. So obviously, what we would like to do is educate you about creating a shift. And the shift is understanding how to use business credit versus personal credit, because you don't want to mix the two, right? You're a CPA. It's a lot easier if everything's built under the business than, a client saying, well, this transaction was personal, these 5 transactions were business, and you're mulling through receipts. So what's important is that if you have a business, make sure that you have a Dun & Bradstreet number, right? So you can go to dunandbradstreet.com and you can register your business and get what's known as a D&B number. D&B.
That's free, right?
It is free. There are paid programs for Dun & Bradstreet where they will actually help you build your business credit, but I don't think that most people need it. Then I usually recommend, if you have a new credit, and you're trying to build, then you would go to Staples or Office Max, right? And you would apply for a small line of credit, credit card in the business name, because that data will be reported under your business. They
Right.
will ask you possibly to do a personal guarantee, but you really only have to worry about that in the event of a default. The other thing you can do is you can go to Experian Business. Again, that's also free. And you can start creating your profile. Same thing with the BBB. So between the BBB, Dun & Bradstreet, and Experian, you could start building your business platform. If you are a bigger company, you may want to start building with LexisNexis and some of the other data providers. And by having an account with them, as you have terms, right? So think about your net 30, as you develop relationships and you have terms with your vendors, you could actually upload your personal vendor contact information, which they will verify, but that will help build out your business profile. But
Awesome.
moving forward, if you want to then get a business credit card or you want to get a business line of credit, you're not able to, you don't have to rely on your social security number. You can rely on your tax ID number, and you can start building business credit and shift the liability.
Yeah, that's definitely important if you want to be in business for the long term. They'll still ask you for a personal guarantee, but it won't go on your personal credit.
Mhm.
So that was, thank you so much for joining us. Just one, what kind of clients are you looking for that work for you?
So really, if you have a pulse and a heart, and you have a problem, just reach out. We're here to help. We have a
Anyone
great
that drinks
staff.
water. Anyone
So,
that drinks.
what happens is that anybody over the age of 18 really will have questions. So you have people that will reach out because they're worried about their children going away to school and getting those teaser credit cards, because they're signing up in student union and you have 3 or 4 banks that are there to say, welcome aboard, and, apply for our credit card, apply here, apply here. So we have a lot of people this time of year that reach out because they want us to really educate their family members about the importance of being financially savvy when they go away to college and not
They
making
don't,
bad
yeah,
choices.
they don't teach the stuff in school. They don't teach you really about the time value of money,
No,
about credit card debt. And, people come out of college, they'll come out with an MBA. I've had clients that are highly doctors, okay? Not just medical doctors, but doctors that run businesses, and they don't know about this stuff, and I'm
no.
flabbergasted. I'm like, how do you not know? I just assume, that's why I said at the beginning, I don't
I'm
assume.
going to tell you something funny, and maybe it will make sense to you. Most of the clients that we service are middle to upper middle class, if not beyond. People that don't make a strong living are very aware of their expenses and their dollars. So they're generally not clients for us because they're very aware.
Wow,
When
they're
you
counting
get,
every dollar. Yeah,
yeah,
I
so
see,
it's
I
when
could
you
see
get
that.
into the higher income brackets. I have clients that make millions of dollars a year, but
And
they
they
don't
spend,
manage their credit.
I
And
could see
there's
that.
no direct correlation. You could make $10,000 a year and have an 800 FICO score, make $8 million a year and have a 500 FICO score.
I've seen that.
Mhm.
I've seen that so many times. That's amazing.
So it's all relevant, but clients for us are people that are having a problem. We're here to problem solve. Again, action plans are free. We do not charge for our initial consultation and advice. We only charge a client in the event that they understand that retaining us for service makes the most amount of sense, because they are too emotionally involved in their own transaction to actually pull the trigger, right? Those are usually our clients.
Awesome. Thank you so much, Rhonda. I appreciate it. And we will be in touch about your projects.
You
And
got it.
definitely we will be sending you a lot of our budget needing clients.
You got it. Well, here to
Okay.
help. So
All right.
enjoy the rest of your workshop. And if anybody has questions, you know how to reach me. Bye,
Yes.
Elizabeth. It was
Thank you.
nice to see you.
Thank you.
Bye,
Hi,
Joe.
Rhonda. It's nice to see you.